Hi, and welcome to Travelex's weekly outlook for August 9th. The U.S. dollar starts the week in better shape than it left off on Friday, as a Fed meeting on Tuesday has caused many investors to scale back on some of their heavy bets against the U.S. currency. Last week, though, we did see the dollar fall to fresh lows almost across the board. We saw the dollar hit a 3-month low against the euro and also an 8-month low against the Japanese yen. We saw the U.S. economy really turn in another poor performance, and that has really undermined sentiment towards the U.S. currency. The latest disappointing news came on Friday when the U.S. employment report showed that more Americans than had been expected lost their jobs during the month of July, while private sector employment, considered a broader gauge of the health of the employment market, added fewer jobs than expected. And so what that does, that suggests that the slowest recovery from the deepest downturn that we've seen in generations will be even more protracted. And what that does is reinforce expectations that U.S. interest rates will hold near record lows for a longer period of time. And what that does is really tends to drive investors away from the lower yielding U.S. currency and to seek higher yields abroad. In addition to the disappointing jobs data that we saw on Friday, last week also featured a parade of negative news that also showed that manufacturing activity expanded at the slowest rate of the year. We also saw that pending home sales unexpectedly fell to a record low in June, while even weekly claims for unemployment benefits unexpectedly jumped to its highest level in 3 months. And so what that says is it really suggests that the U.S. recovery is proceeding, but at a more gradual pace. And what that does, that increases expectations that the Fed this week might be emboldened to introduce new measures to get the economy going once again. That is pretty much the negative news that we've seen of late involving the U.S. currency. However, there are some positive bright spots. It wasn't just the U.S. Last week that reported disappointing jobs data. We also saw that Canada unexpectedly lost jobs for the first time all year. If we get more data like that, more data that points to softer growth throughout the globe in the months ahead, that would tend to highlight the dollar's safe haven appeal, and perhaps that could help the dollar to stabilize. Keep in mind also that the euro has gained about 12% against the dollar since it fell to that 4-year low back in June, and that makes the single currency ripe for some profit taking. The week ahead, as I mentioned, it's really going to be dominated by the Fed meeting on Tuesday. The U.S. Central Bank has already vowed to keep U.S. interest rates low for an extended period of time. So instead, what investors will do is really focus on the accompanying statement. If the latest signs that we've seen of a slowing U.S. economy prompt officials to come to the plate and help out the recovery, that would tend to be dollar negative, as such measures as quantitative easing, that tends to put downward pressure on a currency. However, if the Fed hints that further action is not necessarily needed, if they really voice more concern about the dollar without taking any extra action, that would be viewed as being less dovish, and that perhaps could help the dollar to stabilize. Other key events for the week of August 9th, investors will look at consumer inflation, retail sales, and the University of Michigan's first look at consumer sentiment for August. Keep in mind that any type of news on the consumer tends to garner a lot of attention, as household spending really drives the U.S. economy, and that would really offer clues on the health of the recovery as well. That's all we have for this week. Thanks for watching. For the latest on the foreign exchange market, please check us out online.